Hey guys, my name is Jessica Walker. I'm the owner of Art Nerd LLC. I specialize in making custom shoes and slides using glitter and paint, make DIY kits for your next party, also make wooden or acrylic keychains and jewelry. My website is artnerdllc.com, IG and TikTok are artnerdllc as well. I look forward to working with you guys. Let's get it.
I can get a bass boat and still write it off for my business, and I can put the kids to work, right?
That's it.
Welcome to the Crafting Your Potential podcast. My name is Bruce Jackson with Backfist Customs Glitter. This podcast is for crafters and for people that may want to get into crafting. So my intention will be to bring guests on that can help you out, help you learn things you need to know. Y'all be able to ask me questions or anything of that nature. So this was really born through a podcast boot camp that I did with my business mentor, David Shands. Shout out to David Shands, Social Proof Podcast. Check that out also. So he's the one that's got us on the path for creating this podcast. So while doing that, I met this nice lady that we have with us today named Tomora Duncan. She will have a podcast soon also. Her podcast will be called the Turning Lane Podcast, where she'll be working with mindset. So if you can get a chance, follow her also. Check that out. Make sure to listen to what she's got to say. So she told me that she deals with taxes. And I said, you know what? Taxes is something really big for us as small business people. That's, if you're looking to get into business or if you're looking to make sure you're just doing the things the correct way, you have questions, you're wondering this, wondering that. So I figure I'd bring her on and let her talk a little bit about that. So thanks for being here tomorrow.
You're welcome. Thanks for having me.
No problem. No problem. So if you want to introduce yourself or tell them a little bit about yourself, please do.
Hi, my name is Tomora Duncan. I am the owner of Tax Professionals. I have a virtual tax firm. I have been a tax professional for a little bit over 9 years. As a matter of fact, this month is my 9th year. I've worked for Jackson Hewitt in the past, also worked for a small business tax firm. I just developed a passion for wanting to solve problems. And a lot of people are so afraid of taxes and afraid of conquering the problems that could occur with taxes. Taxes is a lifelong thing of learning, and there's so many moving parts to taxes. And when you're an entrepreneur and you have a small business, it is best to practice good practices to file your taxes. You don't want to get caught up with the IRS. It is always a good practice to file your taxes, and you should have a good professional who will be honest and who will also assist you along the way with getting the taxes filed.
Okay. So have you seen an increase of people needing their taxes done or people needing a tax professional, since it seems like everybody's starting small businesses nowadays, right? Especially since last year with COVID. Have you seen a spike?
With COVID, there was really not a spike, but there was a spike in people wanting to create small businesses, right? I didn't see a spike in people needing tax professionals right off the jump. But with tax season coming around, there will be a spike because COVID-19 showed a lot of us how sometimes the employer does not value us. And it showed people how being at home is not so bad. So,
Right.
and starting a business, it's a lot of work. And especially when you're throwing taxes into it, it is good to have a good tax professional.
Right. Okay. So what's the first step? Let's say I want to get into this crafting thing, right? So I'm thinking about my fellow crafters. I know there's people that get told different things. I've heard people say, oh, well, if you don't make but this much money, you don't have to worry about this or that. So what would be the best practices for someone to take? They're brand new. They're saying, hey, I want to start making these crafts, right? And I'd like to make a little money off of it. What should they do? What's the best way to start that?
So the best way to start that is if you are going to business and it's not a hobby, if you have decided that you are going to make money in your business, it is now a business. It's no longer a hobby.
So as soon as you want to make money, hey, we got a business going on.
You have a business. As soon as
Okay.
you decide to make money, you have a business. It doesn't
Okay.
matter how much money you make. If you only make $400 in your crafting business, that $400 has to be recorded on your business tax.
Okay. Okay. So what about the people that didn't do what they should have done in the beginning? Like, is there any way for them to go back and say, hey, okay, I messed up, or I'm scared now? I did make a couple of thousand last year. So how can they go forward saying, you know what, let me go ahead and do the right thing? And should they find a tax professional in their area? Should they, what should they do? Should they just start from then and going forward saying, okay, well, next year I'm going to do this or what?
They should go ahead and file their tax. It's Although the tax deadline has ended, it is a best
Mhm.
practice to find your tax professional and get your taxes filed. You will incur penalties and late fees, but it is best to get your taxes filed.
Okay. Is there ever such thing as too late? And let's say someone said, man, I haven't filed anything really in the last 2 or 3 years because I didn't think I needed to. I was just making a couple of keychains here and there, a couple of tumblers, you know what I mean? So is it ever too late?
You can go back 2, 3 years. You're not too late. You can still file your taxes.
Okay. All right, that's good to know. Okay, what about business formation? So, I know there's work from home, there's sole proprietorship, there's LLC, things of that nature. Now I know there's different reasons why I've heard some people say, well, you really want to be this, or the LLC will protect you. So is it if you're making something that you don't have to worry about putting other people at risk, then is it not worth it to have an LLC then? What's your opinion on that?
It's really to each his own with the LLC. Um, I'm all things LLC, and I think that it's a good thing.
Hmm.
Because no matter if you're crafting or if you're dealing with people directly, like care or things of that nature. You see people all the time. You're face to face because that LLC will protect your liability and your assets.
Mm.
If something happens, then your personal assets will not be attacked. Your LLC will protect you from that. So I think it is a good thing for you to get an LLC if that's what you want. It's not required that you form an LLC.
Okay. So if you're trying to protect assets, but if they feel like, hey, I'm just making the crafts and I'm just doing a little bit here and there, I mean, would they? So when it comes to doing tax write-offs or getting money back, is there any benefit there from having an LLC versus not having one?
Well, when you file, you don't. Let me clear it up. You don't have to be an LLC to do tax to have tax write-offs. A tax write-off is something that is um, for anyone who is in business. You don't have to have. You could be a sole proprietorship and not have an LLC. You could just say,
Mhm.
"Hey, I have a name. I'm crafting. I'm just. I don't want to form right now. You don't have to do that. Anything that you pay as an expense in your business, you can write it off. As far as meals and things of that nature, you cannot write off more than 50%.
Fifty
So if
percent of your meals.
50% of your meals, and that's business meals. So if you're just going about your day, you're crafting, and you say, "Hey, I'm hungry. I want to go to Wendy's and get me something to eat." That's not considered a tax write-off because you are not conducting business per se by yourself. Now,
Mhm.
if you were with a friend or a business partner, or you even spoke to someone in the restaurant, and you guys got to talking about business and you were introducing them to business, you were talking about anything pertaining to your business, then that's a potential tax write-off for your lunch.
Okay, so but where does the 50% come in at? Does that mean me and a friend go out to eat and I say, hey, I'm gonna write this off as a business. Don't worry about it. I got the business. I got a business for real. I can write this off. The meal costs $30. What does it mean in terms of what does it really mean for a write off? Does that mean that whole $30 I'm getting back at the end of the year when it's tax time, or what? What does that really mean? And where
That
does that 50% come in at?
Okay, so that does not mean that you're getting the whole 50. You're getting the 50% because with taxes, there's so many moving parts.
Mm.
It's going to be determined by your income, It's going to be determined whether you have taxes already taken out. So, for an example, if I buy something that's um, $40 at lunch, or if I go out and buy equipment for a podcast that's $7,000, that does not mean that you're going to get $7,000 back for that equipment. There's so many moving parts in taxes. That's why small businesses need a tax professional to have a consultation with them so that they can speak to them about their taxes going forward. But no,
Mhm.
that does not mean that you will get that $30 here or you'll get half here, half there. No.
Okay, so let's say I'm coming to you and I'm trying to work with you, right? And I say, hey, can you tell me what do I need to do so I can write off as much as possible? If I'm saying, hey, straight out the gate from the very beginning, I want to get as much money back as I can. So what do I need to do, or how do I need to set this thing up so I can get back as much money as possible? Because it's all about the dollar sign for the business, right? So whatever you tell me to do, I'll do. If I need to, do I need to save receipts? Do I need to have a separate bank accounts? Like, what do I need to do to make it easier for you to get me money back?
So first, documentation is everything. If you purchase something, the IRS, normally when there's an audit, the IRS wants to see possibly your bank statement.
Hmm.
They want to know the method that you paid, whether you paid cash or with a credit card. If you paid with a credit card, they want to see your credit card statement. So you should keep all of that. You should keep your credit card statement. You should keep your bank account statement, and you should keep your receipt. Now, some people probably say, okay, well, no, I don't think it's that serious. It can really be that serious. You should keep your receipt. You should keep your bank statement, and you should keep your credit card statement.
Hmm.
Now, keep everything. I tell my clients all the time, don't just throw things in a shoebox. Right on top of that receipt what it's for. It was for equipment. It was for advertising. Because at the end of the year, what you don't want to do is take your tax professional a box of receipts and say, here it goes.
Right,
Right?
right.
So
Because it
with
just
an
makes it
L,
harder on you. Is that why?
it makes it harder on everyone. For one, the business owner is not really paying attention to what's going on because they're not getting organized. They're not trying to figure out where this receipt ties to. Did I put it on this credit card? Did I put it on my debit card? So it makes it harder for everyone because the tax professional can only do work with what you give them. They can
Okay,
only work with what you give them.
that
So
makes sense.
mhm.
So what's the biggest gotcha about taxes? Like if you had to leave the listeners with something to say, hey, I know you're a small business, you've only been operating 2 or 3 years, you're leaving some money on the table by doing this, or you're forgetting this, and this right here will help you make more money in the long run. What is that? What comes to mind when you think of that?
When you do not save your receipt, you are leaving money on the table. Because if you go out and purchase a vehicle or you go out and purchase equipment and it is filed on your taxes, first of all, your tax professional, what they're going to do is they should give you a checklist, right? They're going to give you a checklist and you are going to write down how much you paid for advertising, how much you paid for marketing. You're going to write it out, and the tax professional is going to input that information into the system.
Hmm.
So the tax professional does not require you to show them receipts, but you have to have everything itemized. I give all of my clients a checklist, and when it's time to file their taxes, they'll say, equipment, I pay X amount of dollars. Advertising, I pay X amount of dollars, and they're going to sign it. By them
Right.
signing it, they are signing it saying that this information is true, accurate, and correct. The biggest things about taxes is the documentation and keep organized, keeping your receipts. Because the worst thing you can do is get a tax write-off, and the IRS comes back and say, "Oh, we picked you randomly for an audit." If you can't produce your receipt, if you can't produce the things that they're asking you for, they're going to take your deduction back, and you'll have a tax liability.
that was going to be my next question. So, one, what makes a person get audited? Like, if you had to say, hey, this would be the reason why the IRS may pick you to do an audit. Why is that?
Audits are not a bad thing. Let me say that first of all.
You sure? Because I'm scared
Audits,
of them. I think people scared of them. Okay. Okay.
a lot of people are scared of them. But if you have your documentation, if you have your receipts, if you have documentation, I'm telling you, documentation is if you don't take anything away from this podcast today, documentation, your receipts, it's all about paper trail. If you can provide the information to the IRS, there's no big deal. If you can't, then you will owe a tax liability.
Okay. That was going to be my next question. So, when they do an audit, they're basically saying what? We want you to prove that we owe you what you say we owe you. Is that what that is?
The IRS wants you to prove it. Now, sometimes these audits are very random. Then sometimes these audits are high alert audits, because if you are making $30,000 in your business and you spent $29,000 buying equipment, that's a red. That's a
That's a
red
red
flag.
flag for them because they're thinking, oh, you're trying to get over. You're trying to act like you didn't have any kind of profit. Is that what they're basically thinking?
Well, what they're saying is that you have to have some kind of other income coming in somewhere, because if you make $30,000 and you spent $29,000 or $28,000 buying equipment and writing off deductions, then how are you taking care of the necessities in life for yourself?
Oh, okay. But if you're getting claimed as being married, or you've got other people in the household, things of that nature, then they may put two and two together to say, okay, well, so basically, it's all about that story that you're painting. Is that what
It's
you're
all
saying?
about, yes, it's all about the story that you're painting, because the
Okay.
IRS wants to know, hey, you must have some other income coming in. Now that
Right.
doesn't mean that you have to file with your spouse. It's however you want to file. I'm not saying, oh, file with your spouse just because they may think, but you have to show for yourself what other income, because they may say, you got $30,000 and you spent $28,000 in expenses.
Right.
Where is your other money coming from? And that's not necessarily saying that they will audit you for it, but they could.
Okay. So I have some. Okay. So let's say you fail the audit, right? What happens? Is just like everything you're saying we owe you, we're not giving you anything? Like, what happens if you fail an audit?
So if you fail an audit, you will have to owe the IRS. You will have to pay them the liability.
And how much is that?
Tax liability. It's just whatever. If whatever the tax liability is, it's going to be different for everyone. Just kind of what's your number, because it's a numbers game. Tax is just
So
a
it,
numbers game.
so that tax liability is based off of how much I said I made.
It's
So
how
they're
much you.
basically saying this is probably how much you really should have owed us before you started messing these numbers up. So give us all of it.
No, not give me all of it. Give me that you're going to give them back what your deductions were. If you claim XYZ deduction and they said, okay, well, show it to me, and you can't produce that, then you can't produce the documentation, and they give you that deduction, you're going to have to pay it back.
Okay.
Mhm.
All right. So I have some questions here from my Facebook group. Okay. So, I want everybody to know, hey, y'all can ask me questions on Facebook, Instagram, in the comments below. I'll try to get them answered, and maybe she'll come back and answer them as well, right? So, first one is somebody wanted to know what isn't a deductible when it comes to crafting and selling.
What isn't deductible?
What is deductible?
Okay, so it depends on if you have you can deduct so much of your working space in your home. If you work from home, you have a home-based business. Also, your supplies. If you're making phone calls, if you're taking orders by phone, anything that you paid an expense for, give
Mhm.
that to your tax professional, and they will assist you meals, like we said, 50%, you can claim up to 50%. If you go out on a business luncheon, if you go
Hmm.
out to a seminar, if you go out to, sometimes you guys may have a, what do you call those things? Crafting,
Like the craft fairs.
like a craft fair.
Hmm.
Exactly. Mhm.
Okay. The next question is, how much should be put aside monthly for taxes each year?
So that is going to vary because the it's individually going to vary because it's
Okay.
according to what you're estimated to make. So that's going to vary. That's not something where I could just come out and say this XYZ number. So it's going to be an estimated tax.
So it's not a certain percentage. If they say I made $2,000, roughly, if I'm making $2,000 a month, there's no certain, like, is there a certain percentage to say, hey, put at least this much back and you should be safe?
No, but there is employment taxes, which include the Social Security taxes and things of that nature, and that number is about 15.3%. So your tax professional, you would have to get with your tax professional to get that.
Okay. All right. So someone wants to know also, is it better to hire an accountant or to try to do it themselves?
It depends on how much you can handle and how much knowledge you have. You don't have to have an accountant because not every CPA handles tax matters, and not every tax professional is an accountant. So it's really kind of to each his own.
Yeah, I think some people may kind of look at them hand in hand, because I do hear a lot of people that do one. Some people that do one also do the they do the other also. So they might have kind of put them together. Next question is, what all do I need to do tax wise when running my business full time? So that's a good one. Like, if someone's doing this part time as a business, on the side because they have another full time job, is there anything different for the person that's doing this full time, where this is all they do for their income versus part time or on the side?
There is nothing different you should do. You should report your taxes. You should keep up with your documentation because whether you are running your business full time or part time, if you make $400 in your business, the income is reportable.
Okay.
So, so it's just not
No matter how much time you're putting into doing it.
no matter how much time. But I will say this though: if you are not, if your deductions outweigh your income for 3 years, you are considered a hobby and not a business. The IRS considers you a hobby and not a business.
Wait, so hold on. We got to say that again because that sounded like something deep.
Mhm.
That was deep. So basically, if you're not making money for 3 years,
If you're not making for 3 years consecutive, you are a hobby.
well, what does that mean in terms of taxes and IRS? Is that just how
So,
you're classified? I mean, I don't have to pay taxes anymore, or what? What's that mean?
so what that means is if someone each year is having more deduction than they actually earn in their business, the IRS does not consider you a business. They consider it a hobby because you're not making money. Because each year, kind of like the Donald Trump effect,
Mhm.
when he was writing off all of his expenses and getting away with not having any taxes. So basically, what he did was offset. He may have truly did not make what he desired to make in his business. That's not saying that he did anything falsely.
Right.
What that means is that he was really running a hobby and not running an actual business.
Well, that's the way they look at it in terms of classifying it, right? But correct me if I'm wrong, because I told people this, but I'm not a tax professional. It's just logically trying to think about it. I'm saying, okay, you can't get mad at this man for playing the system or playing the game. He knows the rules, so he's doing what he's supposed to do or doing what he can do to get by without paying those taxes. Is that kind of what it is?
That's
Because
kind of what.
I've heard people say, "Oh, they say I owe." So I heard someone come on I think Grant Cardone came on, and he was saying, "Oh, they said I owe 40,000." So I said, "What did I have to buy to get rid of that?" So he bought a private jet. So he bought something big enough to where once he write it off, it would make it to where he don't owe that much money anymore. And then it's kind of like, so if someone heard that, they'd say, "Oh, he's not paying his taxes," but really he's just taking advantage of the rules that he knows or that his tax people know, right?
He is taking advantage of the rules. That is correct.
Okay.
And there's nothing wrong with that.
Right,
If
right. I don't.
if you can show documentation and you can show that it was necessary for your business, because all the IRS says is that it has to be customary and necessary for your business in order to make them a write-off. There was a story, if I will, about a realtor who bought a yacht to show lakeside and oceanside high-end property, and she bought a yacht. And so she went to court and everything and actually won her deduction because she let them know, hey, I have high-end clients. My clients are millionaires. They, she can't take them around the beach side in a minivan.
Right.
So in order to attract more clients, she bought a yacht. And that makes sense because if you're dealing with high-end clients and the majority of your property is high-end property on beachfront and oceanfront, how are you going to win over your clients by a yacht? And she bought a yacht.
But are we saying so? But are you saying that the IRS can say, "Nah, that don't really make sense"? So, like, let's say I'm not doing enough crafting to where I'm buying a yacht. But let's say I go out and buy a bass boat, and I'm saying, well, what I do is every so often I take my members out or my customers out, and I do little giveaways or whatever, where I take them and their kids out fishing. And as long as I've actually, I did it before, they could go on Facebook, they'll see my post, they'll see the things where I've mentioned it. I mean, could they say, well, no, you shouldn't have bought that bass boat. That don't make sense tax wise. Like, no, that don't make sense. Or would they just say, okay, well, we see he's really using it for the business. So, okay, we'll let him have that.
So on your bass boat, if you're hosting crafting events, you are attracting more clients in your business from a crafting point of view that you could possibly win over your deduction. It's not that the IRS says you cannot do it. You just have to prove to them. The IRS are human just like we are. You have
Right.
to prove to them that this is why it was necessary and customary for your business.
Okay. That makes sense. Someone said, how do I set my child up who I pay as an employee?
You have to be structured. You can be structured as an LLC, or you can be structured as a sole proprietorship to set your child up. But you have to have rules and everything kind of like the same with anything else. So if your child is taking out the trash in your business, if the child is doing secretary work in your business, you have to make sure that it's customary for the age appropriate. Now, I know some people will say, well, I have a 7-year-old. I'm going to have him to take the minutes for my business. So I wouldn't recommend that. I would recommend that you really tailor those things in the business as age kid appropriate.
Okay.
And you have to have some of the same documentations, right? You have to have something like a W-9, things of that nature. So once you get with your tax professional, they will let you know everything you need to do. But yes, you can write that off as a deduction for your child. You can get that credit. Also, let me tell you this part. When you are just a sole proprietorship, or you are an LLC single member and you are not incorporated, you cannot deduct your salary. So if you pay yourself $300 a week and you are not incorporated, when I say incorporated, I mean S Corp and C Corp. you cannot deduct your salary. So that's something that a lot of people kind of misconstrue. They want to know, well, why I can't? I'm paying myself. Why I can't?
Right.
Those are not the rules for unless you are a S corp or a C corp. And the S corp and C corp is so lengthy, and it's so much to comprehend, and it's so much to get into. Your tax professional with a consultation will be able to assist you with the needs that are tailored toward you and what you're needing and wanting.
Okay. So do you have time for one more? I got one more question.
Sure.
So someone says, how the heck do I remove one child from the tax credit but keep the others?
Okay. So you if you're taking care of that child, or were you taking care of the child and you just don't want to, or was someone else taking care of the child and you just not need to claim that child, or you're just letting your significant other or your spouse or your kid's dad, someone carry the child? Because I need to know that information.
Oh, I'm not sure. It's just a question that was in the Facebook group.
Okay.
Yeah.
Yeah. So if you're not wanting to claim that child, then you'll just hand over the responsibility for whoever took care of that person, because technically whoever took care of that child 6 months and 1 day is the one that should claim the child.
Okay.
If you're going to split it up. So
Right.
if my child lived with me 6 months and then went 6 months and 1 day, you can let the other person claim the child if that person was taken care of.
So basically, my main takeaway is that I can get a bass boat and still write it off for my business, and I can put the kids to work, right?
That's it.
What about an age limit? Now, is there an age limit on how young the kids can be? Because we don't want people writing off 5-year-olds saying they're cute and I use them to take pictures. Because someone may think that, so I want to clarify. Because they make crafts and tumblers and things, so they may want to put something beside a kid and say, well, I'm using the kid as a prop in the photo. I don't know.
Yeah. So it's ages between the ages 7 and 17 years old.
7 to 17. Do they have to be my kids?
They have to be your kids.
Okay. All right. Last question, I promise. If someone needs to get someone else to work with them to help them with some work, right? What's really the difference between trying to hire someone on payroll as an employee versus putting them in Quicken as QuickBooks as a contractor? Are there pros and cons to that you can speak to?
Yes, the pros and cons are, if you're going to do a contract 1099, you are not responsible for taking out any taxes. The other person is responsible for taking out their own taxes.
Okay.
Now, along with that is that you don't have to pay business taxes on their part because you're not taking out any taxes on their behalf. So what I can say about a W-2 versus a W-2 is a W-2 seems like it's, for the other person, it is kind of a more stable type of job. Now, contract is kind of like, I'm just on contract versus the W-2. It's kind of like an ongoing thing. And a contract can be an ongoing thing too, but typically people look at a W-2 job as being more stable. They take out my taxes for me. I don't have to be liable for my taxes at the end of the year.
Right. Okay. So again, thanks for coming. Thanks for sharing your knowledge with us. We'll have to have you on here again one day after everybody starts to listen. I'll see what other questions people may have. If you don't mind, we'll have you back again one day, okay? Please let everybody know, let the listeners know how they can reach you, how they can follow you on social media. Y'all go show her some love. Let her know we appreciate the information. How can they get in touch with you?
I am on Facebook as @TaxPros241, and I am currently taking consultations. 1 hour consultations is $275, and I go over everything from A to Z. I'll do a pre-consultation form with you, what your needs are, how you're looking to structure, how you could possibly benefit from it, and some of the things that are tailored toward your business specifically.
All right, y'all. Thanks for tuning in to the Crafting Your Potential podcast. Again, I'm Bruce with Backfist Customs Glitter. Until next time.